Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation using moving averages to your advantage. Moving averages are valuable tools in stock trading as they help smooth out price data, making it easier to identify trends and potential reversals. By calculating the average price over a specified period, traders can gain insights into market momentum, set strategic entry and exit points, and reduce the impact of short-term price fluctuations. Now there are a few common types of moving averages. First, there's the simple moving average, otherwise known as the SMA. A simple moving average gives equal weight to all data points in the period, and it's best used for long-term investors and long-term trend identification. Anything over a 50-day moving average, I think SMA is perfectly fine to use. It's when you start shortening up the time period that you may want to change the type of moving average that you're using. Another popular type of moving average is called the exponential moving average, or EMA. An EMA gives more weight to recent data, making it more responsive to price changes, and it is preferred by short-term traders because of its sensitivity. Anything less, I think, than a 20-day moving average, you should use an EMA. Now, I sometimes use a simple moving average when I'm looking at a 20-day moving average, but 20-day moving average, you can use either an EMA or an SMA, but particularly when you're looking at time frames less than 20, 13-day EMA, 8-day EMA, 3-day EMA, which are some popular time frames, you want to use an exponential moving average. Some functions and benefits of moving averages. First, they identify trends. Moving averages, again, smooth out price data, making it easier to identify the underlying trend of a stock over a specified period. And by filtering out short-term price fluctuations, traders can see if a stock is in an uptrend, downtrend, or moving sideways. Support and resistance levels. Moving averages can act as dynamic support or resistance levels where price tends to bounce or reverse, and traders can use these levels to determine entry and exit points, managing their positions effectively. They reduce noise. The stock market is highly volatile, with price fluctuating rapidly in the short term. Moving averages simplify these movements, allowing traders to focus on the general direction rather than reacting to every minor fluctuation. They generate trading signals as well. Moving averages are used to generate buy or sell signals based on crossovers. A golden crossover is when a short-term moving average crosses above a longer-term moving average. It signals a potential bullish trend. A death cross is when a short-term moving average crosses below a longer-term moving average, which signals a potential bearish trend. And all depends on your time frame. If you're a longer-term investor, you'd be looking for a crossover like a 50-day moving average crossing above a 150-day moving average. That's going to identify a long-term change in trend. If you're a short-term trader, you might be looking at a 3-day EMA crossing above an 8-day EMA. That identifies a change in the short-term trend. You can adjust moving averages to different time frames. Moving averages can be customized to any time frame, 10-day, 50-day, 200-day moving average, again, based on the individual trader's strategy. This flexibility allows moving averages to be used by day traders, swing traders, longer-term investors as well. It's not just a tool that a short-term trader would use. Investors can use them as well. Moving averages highlight the momentum of a stock as well, with steep angles indicating strong momentum and flatter slopes indicating weakening momentum. This helps traders determine when to stay in a trade or exit. And finally, moving averages work well when combined with other technical indicators like volume and relative strength index, because these combinations provide a more comprehensive view of overall market conditions. So I've brought us into the VectorVest program now. We're going to go through some examples and some trading techniques that you may want to consider here moving forward. With VectorVest, you guys have an edge, right? When you look at a list of stocks within the program, it's not a random list. Now, I like the S&P 500 watch list. It's a good place to start. It's a great list of stocks. The way this list is populated is intentional. It's force ranked The default ranking system in any list of stocks that you're going to access, whether it's the stock viewer or a watch list, is VST. VST combines value, safety, and timing into one comprehensive indicator. Within the VectorVest program, of course, you can rank any list of stocks by any indicator that you see here. I'm going to close this down and give us a little bit more real estate. If you're looking for the safest stocks in the S&P 500, you would rank by relative safety, right? You click on relative safety. That force ranks all 500 stocks by relative safety. We're looking at the stocks at the top of the list with the highest relative safety score and inherently the safest stocks in the database. One of my favorite indicators within VectorVest is CI, Comfort Index. Comfort Index measures a stock's ability to withstand long or lengthy price declines. If you've heard of the Ulcer Index, you know that the Ulcer Index rises the more and the further a stock price falls. The CI indicator rises the more and the further a stock price rises. It's on a 0 to 2 scale. Above 1 is good, below 1 is bad. And you can force rank the entire list of 503 stocks in the S&P by that indicator as well. So it's a good list of stocks to start from. I'm going to click on Graph All. We're going to open up the chart, and all I have here, we're looking at KKR. We have price at the top and volume at the bottom. Clearly, this stock over the last 1 year is in a nice, steady uptrend. Different time frames or the different trends that you should consider analyzing when opening up any stock graph is the long-term trend, the intermediate-term trend, and the short-term trend. So a moving average that you can use for the long-term trend is a 150-day moving average. If I right-click on price, go to Add Moving Average. Again, we're looking at a moving average now that's greater than 50 days, so I can use a simple moving average. I'll click on 40. I will raise this to a 150-day moving average. You can also use the 200, very, very similar. If I check the box, you can see that over this 1 year time period, the price has been above the 150-day moving average the entire time. So we're looking at a long-term uptrend. I think it's clear here that the stock is likely in an intermediate-term uptrend as well, right? So if we were to check the 50-day moving average box, we can see that the price is above the 50-day moving average. So intermediate-term trend is up, the long-term trend is up. But as you can see, as of the hard right edge, price has recently pulled back off of a new high. So I'm going to introduce this concept now of buying retracements or looking for retracements, pullbacks towards short to mid-term moving averages as potential reversal signals. So again, we're looking for stocks that are in clear uptrends, that are hitting higher highs and higher lows, and we've confirmed that by adding indicators like the 50-day moving average and the 150-day moving average. So we are spotting now and we're recognizing that the stock is pulling back and retracing. Well, it hasn't come all the way back down to its 50-day moving average yet. And you can see the trend has accelerated here, particularly over the last couple of months. So if we add another layer to this, right, our short-term moving average, mid to short-term moving average, you can see if we put the 20-day moving average on, that price has pulled back and is now kissing or touching that 20-day moving average. So we're experiencing now a pullback, but not a complete trend reversal to the 20-day moving average. And we've seen, or we're observing, a slow, controlled decline in price, right? Not a sharp drop from the old high. What I would then look for, and clearly we haven't seen price, let me zoom in so we can see it a little bit closer. We haven't seen price truly retrace and reverse off of the 20-day moving average. That is what you're looking for. You're looking for an entry signal here. We have identified it's not only a high CI stock, but it's in a strong long-term uptrend. It's in an intermediate-term uptrend, but the short-term trend has weakened a little bit where price is now kissing and pulling back to the average 20-day price, right? Thinking about what a moving average is. It's the average price over a specified period. And you can see, we talked earlier about how moving averages can serve as dynamic support and resistance. We'll take a look at price here recently and how it's moved away from the 20, but had come back down and retested, right? Retested a few times. What does that 20-day moving average now serve as? It serves as dynamic support. Dynamic in that it's continuing to move as price moves. So just like you would look at a price pulling back to a horizontal support level, what would you look for? You look for a retracement off of that. We're looking for the same thing. Now I'd look for maybe a bullish candlestick reversal pattern, maybe a hammer or a bullish engulfing at that 20-day. I don't quite see that just yet, but I do see a little bit of a doji here. So indecision right below the 20-day with a nice up day on Wednesday, a little softening yesterday on Thursday, but right at, still kissing that 20-day moving average. I'd wait for price to move above, let's say 159.19. That was the recent high, or the high of the day where the price of the stock kissed for the first time that 20-day moving average. I also want volume confirmation. I want to ensure that there is increased volume when the stock bounces and retraces off of that 20-day moving average. So we're going to check volume as well. This is not a trade that I would take yet. I need that break and that push off of that 20-day moving average. Enter the trade, like I said, when the stock price bounces off the 20 and confirms the reversal. And you could use a buy stop order or just watch as price moves higher than the high of the kiss candle. In terms of managing risk, a simple stop loss mechanism can be putting your stop loss right below the 20-day moving average or below the swing low. Imagine price pushing off of the 20. You're taking the trade. It's a rather low risk trade because you're now in a continuation of that uptrend. The 20-day moving average or the recent swing low is a reasonable area where you should set your initial stop. You can use the recent swing high or resistance as an area where you might want to consider taking profits. Okay, so this is a really nice setup. First stock in the list. It's a high CI stock. We've examined all three trends, and this is just a simple 20-day retracement trading strategy. Let's take a look at some other ones. I'm going to take off the moving averages here, and we'll kind of start from scratch as we move to the next stock. So here's HWM. 1 year chart, beautiful looking chart, right? So if we put the 150 on, price is clearly in a very strong long-term uptrend. If we add the 50-day, price is currently above the 50-day moving average, so the intermediate term trend is up. And you can see this 50-day moving average over the last year has served as your dynamic support level, right? Price has barely crossed below that 50-day moving average here during the last year. Kind of flirted with crossing it, residing below it for a little bit, but served as nice support there, right? The trend has accelerated. If I add the 20-day moving average, you can see price is currently in between the 20 and the 50. So I don't mind, and I almost welcome these types of price consolidation periods in or during these strong uptrends. It's natural for this to happen, right? It's natural for price to revert back to average pricing. This is not the best setup here because we're a little bit below, and I like a more steady decline as opposed to a sharp drop that we saw here, so I might skip this one. Here's GoDaddy. GoDaddy clearly in an accelerated short-term uptrend. There's price above the 150, above an upsloping 50, above an upsloping 20 as well. I would almost argue here that maybe a little bit overextended in the short term. We're going to get these pullbacks. We're going to get these pullbacks to these shorter term moving averages. So not the best setup. It is a high momentum type stock, but if you're really looking for retracements or pullbacks back to the 20, this doesn't necessarily fit that. There's NVIDIA. Unfortunately, NVIDIA is not setting up in a way where I would look to take a long position. In fact, it's actually forming a head and shoulders pattern here over the last couple of months. There's your left shoulder, there's your head, there's your right shoulder, there's your neckline. Fortunately, price has not broken below this support level yet, so there is still some hope that price continue to move higher. But again, if you're analyzing the trends here, you're in a strong long-term uptrend. Price is above the 150. Look how the 150 served as support here. The midterm moving average, though, not as strong, and clearly if you put the 20 on, the 20-day moving average is rolling over. Price action here is not conducive to taking on a long position, so you'd skip that one. This is a fantastic setup. So we've looked at so far price pulling back to the 20. who would use this type of a strategy? I would say a more short-term trader. Now, an investor, a longer-term, mid to longer-term investor, might not pay so much attention to the 20-day moving average at all. Here, in this case, with TRGP, and this is the flexibility about moving averages and how, look, not one moving average works exactly the same on every single stock. Some stocks perform differently using different moving averages. Here now, we're in a nice long-term uptrend. Intermediate-term trend is strengthening as well. Price has steadily pulled back. Yes, it did cross below the 20-day, but it's sitting right at or right above the 50-day moving average. This is a fantastic setup. I would look for, again, a reversal signal, some type of candlestick signal, or at least a retracement now from this point. We're looking at, Thursday the 12th, December 12th, the close of yesterday. Price is kissing that 50. Look at what's happened the last few times that price has pulled back to the 50. Right? You got your reversal off of it. That's what I'd be looking for here. Now, that's a simple pullback technique. The pullback technique, as I've outlined, can be applied to any moving average. Again, if you're a shorter term trader, you look for a 20-day moving average pullback or shorter. Intermediate term trend trader, you'd look for investor, you look for price to pull back to the 50-day moving average. Sometimes you'll see price pull all the way back to the 150, like we saw a few times with one of the stocks that we were looking at earlier. So this is a nice little technique to find stocks that are pulling back in the short term, but are in really strong mid to longer term trends. Another technique is looking for the crossovers. So let me take off price for a moment, and we could see TRGP, and this is again the 50-day moving average, and this is the 150. I mentioned earlier how a long-term investor might look for stocks whose 50-day moving average crosses above the 150-day moving average. It's called the acid test. It's the 10-week moving average crossing above the 30-week moving average. Well, when did that crossover happen? Well, the first crossover, just kind of, zoom in right to this area here. You could see that we had a bullish crossover here. There was, a few months here where the 10-period moving average, the 50-day moving average was below the 150-day moving average. An investor is looking at that and saying, I'm not taking a trade yet. I'm not taking the investment yet. I'm waiting for the true trend to change, the long-term trend to change. And that happened right about here, the end of July of 2023, at a price of about $82. Currently, the stock price is at about $185. So a double bagger there, more than 100% return on this investment by simply using a moving average crossover. Managing the trade is pretty simple. If you're looking, and again, you're a longer term investor, you have a longer term perspective, you're looking for these major moves and you want to stay in the move as long as possible. So you would use the bearish crossover. A bullish signal is when the short-term moving average crosses above a longer-term moving average. Bearish signal is the opposite. Kind of flirted with the bearish crossover here, but never got it. The 50-day never crossed below the 150, and the stock continued to move higher. There was some noise along the way, and that's what moving averages are for. They help reduce the noise, quiet the noise, so we don't get flustered and sell stocks or exit stocks too early or earlier than we're supposed to if we think the trend is breaking down. True trend didn't break down here. It did move sideways for a little bit, but didn't break down. Let's take a look at the next stock. Here's SYF. Bullish crossover was here about the beginning of this year. Never had a bearish crossover. Nice 50-day moving average crossing above the 150. Again, a ton of noise along the way. But this is for the longer-term investor. If you were a shorter-term trader, let's look at something like a 20-day crossing above a 50-day. Now that's kind of your midterm trend change, right? Now in this case, it happened a little earlier, of course, right? The shorter term trend is going to change up before the longer term trend changes up. So in this case, you had the end or the beginning of December of 2023. And here, looks like you might have gotten bounced out here. Because again, it's a faster signal, right? It's a shorter term moving average. Kind of got bounced out there, but was able to take the trade again at about $50 on the bullish crossover. An even faster signal would be something like the 3 and the 8 EMA. Okay, so if I put the 8-day EMA on, take off the 20, take off the 50, I need to add a 3-day EMA, so I right click on price, go to add moving average, exponential moving average, add to 3, check the box. Okay, now obviously take price off real quick. You can examine the chart without using price, without looking at price. Obviously this is much noisier, but if your outlook is much more shorter term, maybe a few days or a week or two, this would be a nice setup to follow. If your outlook is longer, then you just extend the period of the moving average. Okay? Now, this is of course a manual process that I'm going through, right? Looking at a list of stocks, pulling up their charts, setting up the graphs, either identifying pullbacks to your specified moving average, 20, 50. That's again depending on what type of an investor you are or what type of portfolio you're managing at the time. Crossovers can be identified too on charts. I'm going to show you another way. Now you do need the ProTrader module for this. It is an add-on module to the program. It comes included with our VectorVest Premium product. But within our Unisearch tool, we have a tool here called ProTrader, which as you can see from the top has a few different to start moving average crossovers. So you have here the 50 and the 150. The acid test, 50-day moving average crossing above the 150-day moving average. And again, those are MAs, which is a simple moving average. If I were to run that scan quickly here, as of the 12th, sorted by VST, if I go graph all, change my layout a little bit, all right, I got to take my short-term moving averages off and put my 50 and the 150, and look at that. There's your first bullish crossover, right? This stock, though, is rather volatile. You could see over the last year you did have a bullish crossover here. Didn't necessarily, in this case, identify a change in trend. Okay, and in these choppy sideways markets, folks, moving averages aren't as effective, right? They're trend indicators. So when there is no trend, it can produce unfavorable signals from time to time. Okay, so here's ML, Money Lion. There is your first bullish crossover after a little while. So if I pull us back a little bit further, we can see, kind of look historically, at the last time you had a bullish crossover. That was back here, right? Price had been falling for quite some time, below the 150, below the 50. Both of those moving averages were sloping downward. So one of the benefits, right, of moving averages is they identify momentum and trend. Down-sloping moving averages identify a downtrend. Up-sloping moving averages identify uptrend. The crossovers will then identify the change in that trend from down to up in this case because it's a bullish crossover. You take the position here at $24, and you can see it went well over $100. Now you had a violent pullback here, and even if you closed on the bearish crossover, you still made almost $17 a share. I think there's better money management rules that you can follow here, like price crossing below the 50-day moving average and staying below it there. But nevertheless, you're getting a fresh, new, bullish crossover here using the 50 and the 150. And I just go through all the stocks. Here's ICL. Wow. If I take off price, you can see the bullish crossover here. I wait for a little bit more upward momentum before I would take an investment like this. But you're getting a new bullish crossover here with ICL. Nice bottom fishing opportunity. Just keep going through. VNT, this is a good one. A much smoother chart, right? Much smoother price action over the last couple of years. There is your bullish crossover. There was your bearish crossover. You're getting a fresh bullish crossover here, and if history repeats itself, you could be in for a nice long-term run there. And with the ProTrader tool, you don't have to just search for a 50 and a 150. You can modify this a little bit. If I change the parameter here, instead of a 50 and a 150, I wanted to look at a 20 crossing above the 50. It's a little bit of a faster signal. Very easily run the scan, graph the stocks, add the 20 and the 50, and there's your fresh crossover. I, again, don't mind taking price off. because you can see the crossovers and the moving averages a little bit better. All right, folks, hope you guys enjoyed tonight's special presentation. Any questions on this, just give our support department a ring or email us. More than happy to explain and walk you guys through anything that you need. Have a great weekend, folks, and we'll see everybody next week.
Yeah.